So we know that we've got a potential rejection here and or a strong breakout up into this gap fill. If it doesn't, we know that we've got a potential rejection here. That kind of gives us and or a strong another layer to the gap fill. Let me if it doesn't, we know that there we go. So that kind of gives us another layer to the gap fill. Let's take a look here. All right, so there's going to be the initial chop, and that's just the yeah, we get a little bit of an echo here. Let's take a look here. Let me turn Porter's volume down in Discord. All right, so there's going to be the initial chop, and that's just the yeah, let's try that. An echo here. Let's take a look here. Let me turn Porter's volume down in Discord. All right, so there's going to be the initial chop, and that's just the no. Okay, I wonder if it's because the audio is coming through. Let me turn Porter's volume down. Hang on, guys. I think I have a solution here. Okay, I wonder if it's because let's try that. How about now? Hang on, guys. I think I have a solution here. Still double. Wow, that's interesting. Try that. How about now? Hang on, guys. I think I have a solution. Okay, let me try one more thing here. Still double. Wow, that's interesting. Let me try to uncheck this box. How about that? Okay, let me try one more. Test. Still double. Wow, that's interesting. Really? That's so weird. To uncheck this box. That worked? How about that? Okay, beautiful. So that was a Discord problem. So, all right. I'm so sorry about the sound issues here, guys. I'm gonna spend probably an hour or two tonight to sort this out because I don't understand why voice meter is trying to be so invasive. I'm so sorry about the sound issues. But anyway, so we've got our initial chop, and it looks like it's probably choosing bearish for now. That means that we can then use that to our advantage. But I'm just gonna look at the ticks here. We've got our initial chop, and I'm gonna turn on Heikin-Ashi. Obviously, we like to do that for these. And I just kind of want to identify where the impulses are. And then, based on that, we can obviously kind of see a little bit inside the volume, and it's a little bit of a trick here that we like to use. And then, so kind of like based on that, we can obviously kind of see a little bit kind of like inside the volume, right? And it's spending a lot of time down here. There's a lot of participation down here, so that tells me this. Right? This is kind of the range that I should be looking for if I'm a scalper. So I really just want to trade the bottom to the top with tight risk, and tight risk up here if I'm trading to the short side, which if I'm not actively shorting shares, I can't really trade options for puts. I really just want to trade the bottom to the top with tight risk. So what we can do is then come back to the 1 minute, and then we've got kind of a little bit of a zone here, right? So a little bit of an area that we can look for. And this little pop right here is what I'm going to watch for. So let me just come up here. I'll switch it back to here. We'll do 133. So we're already getting our initial 25% pullback. That's already satisfied. So now, the safe part of the trade is over. So now between here and there, it's kind of risky biscuits, right? So I'm going to do a little red box there. So we're not jumping into things right now. We're just kind of watching and assessing the volume. So this 25 to 50% rejection zone or indecision zone is typically where we see that H-shaped continuation. Now this one is this 25 to 50% rejection. This is a volatility catalyst. It's an earnings reaction. So the volume doesn't really matter in alignment with the earnings results themselves. So I know a lot of people tend to volume doesn't really matter. Is that I know a lot of people tend to put a lot of focus on the actual results of the earnings, and unless it's like a World Bank or something, that's really not going to matter too much. So there's always going to be the initial impulse. And when it comes to earnings, we have 3 trades, right? We always have 3 trade opportunities. We have the initial impulse. That's really not going to matter. So let's say the stock shoots down, right? Scalping that, or if it goes up, scalping it to the upside. That's the initial impulse. That's the volatility. So let's say the stock shoots down, right? I guess you call it like a bigger form of volatility arbitrage, right? So you're just taking advantage of a displacement. Then from there, once that halts and kind of pulls back a little bit, you get the bounce opportunity. And that's what we're looking at right here. Taking advantage of a displacement. Just this little bounce. And that's usually a 0 to 25% pullback, and that happens about 90% of the time. So it's pretty reliable, but it's smaller. Okay. And then from there, it's going to go up, down, or sideways. We have the recovery, right, which is typically the least reliable. So we're going to make that orange because it's a cautionary item. And then we have the longer term recovery over time, over several days in a lot of cases. So this is the stablest opportunity. This is the riskiest opportunity. Okay, so right now we're in the riskiest possible area. Okay, so if anyone's jumping in right here, trying to pick a direction up or down, unless you have your risk super tight, you are going to put yourself in a world of pain if you don't come to terms with that, if it goes against you. So this is the riskiest part for the initial move. This is the safest part for the initial move. So I'm going to just make that yellow. So in terms of safety, we've got this being the safest. We've got this being the second safest. Then we've got this being the highest risk. Let me actually make that red. And this is the most potent area for violence. So this is the initial impulse has the biggest range of aggression. So that's what makes that the riskiest. Then you've got the bounce, which is relatively safe as long as you get the bottom right and wait for it to actually start to pull back up. Then you've got the harder sell-off, which is where people get trapped, and that's where the emotion comes in, all the psychological damage from not stopping out. And then the long-term recovery, again, this is my bread and butter, and I know Ned likes that as well. So let's just use that as a guide here. All right, so what we can expect here is a decision out of this box. You know what, I'm actually going to kick it over to 1 minute here. So what we can expect here, just erase all these drawings as well. And we'll just switch back. We don't need Heikenhashi for this. The original move is already over. Kick it over to 1 minute here. All right, so there's the impulse. Okay, we've got the move to the downside. We've got the 25% pullback. Okay, we're in the risky zone right here. All right, so there's the indecision zone, which tells us we're either going to get a move out of the box to the downside into a new low. We're going to get a move to the upside into a fib retracement, and that might break here and then go to a potential new low. So these are the only three scenarios I'd be looking for, and that kind of depends on what type of trader I am. So let me also just check path real quick. Same thing. Okay, only three scenarios I'd be looking for. I don't like this one. So right here, we're looking at that bounce. It's a 25% potential, and the trick here is, if you're not sure where the bottom actually is, if it hasn't happened yet, you have no way to time the bottom other than guessing, right? Even if you're reading volume and all that good stuff. So this is where most people tend to get hurt, is because they try to pick the bottommost candle, and then they don't respect their stop losses, and that's what messes them up. So if you have a plan, that makes it a lot easier. So if, for example, I were to trade right here, okay, and I were to grab this specific candle, and I were to say, this is my specific low, and I want a 1 to 2 take profit, because I'm just looking for a quick bounce, right? That would be my trade. If it's down here at all and I'm still in it, I've ruined my trade. I've deviated. That's an unsuccessful trade, even if it's profitable, right? Likewise to the upside. If it's up here and I'm still in it, and I didn't plan to scale out or anything, I've broken my trading plan, and that's what sets me up for pain. So I'm just going to kick back to Adobe real quick. It's up here and I'm still in it. All right, so right here we're touching the 50% Fibonacci retracement zone. This is where everybody likes to jump in. This is the bulls pushing this up into this area. Now the bears have a chance to respond, which means we have a rejection zone. So I'm just going to erase this. If I can. Pushing this up into this I'm going to erase this as well. Now the bears have a chance to respond, which means we have a rejection. All right. And what I like to do is I like to wait for a couple things to happen. So first off, we don't like to jump in immediately when that fib retracement zone happens. What I like to do is instead, what we can do, let me just first off, what I would like to see happen is a move up here. If I'm trading this to the downside, right? And I'm not going to get into the super complex parts of it. But basically, this is an opportunity that has been created to exploit people. And a lot of people are going to FOMO in, and then they're going to manipulate those people, trap them, steal their shares, and then push the price in the direction that everybody wanted it to go. So you can avoid that by just not jumping in right away. So that's what we're going to do today. We're going to just watch, and we're going to time that specific entry, and we're going to do it in a healthy way. So right here, we have a very similar setup. Okay, so if I draw a line right here at this wick, there's a reasonable assumption here that this should sweep down here and push to the high side. Now, because this is an earnings catalyst, I also have a peak up here that I need to watch. So I'm just going to make these dashed lines. Sweep down here and push to the high side. Shake my head a little bit, and then we'll just watch, right? Because now we have a clear test of the Fibonacci zone. We've got separation, a little bit of separation. We can look for a retest, and then some sort of exploit to happen, right? Because if I'm thinking about this from the perspective of a big banker, right, I can't go to my boss and say, I've got $100 profit. Give me a raise, right? I've got to come to him with 6 figures, 7 figures, 8 figures, which means I need a lot of size. And when I've got a volatility catalyst like this, there's a lot of volume. I need to exploit that to get that 6 because I can't get all my orders or all my shares filled in one spot. I have to spread that out, which means I need to create a problem and then solve it. So this is kind of what I'm teaching the lifetime members. I'm giving you guys the super watered down version. Oh, you're getting a duplicate audio on X. I'm sorry about that. There's a little bit of an issue with my software. I'm sorry. So I'm going to try to get that figured out today. There's a little bit of an issue. So if I want the price to push down, pull back, retrace, I can create this opportunity knowing that 90% of traders that trade fibs are going to jump in right here as soon as it breaks below. I know that I need to get their shares, so I need to push the price up in here or somewhere above that. Okay, now above that, that's not good enough, right? Because they might choose to not defend the zone, which means we need to wait for the confirmation. So again, if I'm a big banker and I'm competing against other banks and I want to take everybody's money, I have to create a setup. I have to set up a trap. Okay. And right now we kind of have that. So a lot of fib traders are, they're going to try to bank on that reversal to the downside. So we've already seen this leg of it, right? Now we can look for a retest up to the upside. And we also know that there is a threshold here that needs to be broken before it can resume to the downside if those guys want to get filled. And we also know that this is very simple liquidity trading. So I'm not going to go super in depth with the candle to candle analysis, but you guys get the general concept here. They want the price to go down. Everybody wants the price to go down. Haven't even looked at the earnings yet. I just know what the banks are going to do to exploit people, or what they like to do, I should say. All right, so here's a little bit of an algo switch. You can see it's kind of, they're chopping back and forth. This is a compression, so it's probably going to release to the upside and then slam back down. So here's a little bit of an algo switch. They just love to take people's money, and this is a compression. Sitting back and just kind of letting people mess themselves up, as horrible as it sounds, and kind of run into these traps is that's a great way to see how it all works. Also, just so you guys know, I'm in the process of selling this house, so I might have people come down here and ask me questions about the house. So I might have to take like a little bit of a break. But I'll leave the charts up and stuff so we can kind of see what's going on. All right, so path would have hit. Now that's only a 4.83% profit, but the safe part of this bounce is over. The 25% pullback is over that we get 90% of the time, and we did it with a minimal risk. It's 2.41% risk, a 1 to 2 take profit ratio. So very easy, very straightforward. Now I can't do anything until another setup presents itself. I don't want to just force things, okay? So I'm assuming this is going to go down, but I can't confirm that because the chart hasn't told me anything yet. Okay, so right here, we're kind of in this area where we should be seeing this pop. Maybe I drew these lines a little bit too far to the left. But we should see this little pop, just this little liquidity pop over here. It should be happening pretty soon. I don't have the level 2 data on this account, but we should see this little pop, just this little. So we'll just have to wait and look at the time and sales, but it's showing everything that I'm expecting to see. So we'll just wait and see where it actually goes. But I'm willing to bet there's probably a bigger wall here on the ask side, and then that's going to switch over to the bid side. So we'll just wait and see where it actually goes. So we'll just go ahead and wait and see what the high of this candle happens to endure here in a minute. But we got inside candles for those who are Harami traders. You've got, or the strat traders, you've got your 2 candle right here. And then we're about to break over that for your directional breakout. Sorry, it's a 1 candle. Or the strat 2 is the directional breakout. It's been a little bit. We're about to break over that for your directional breakout. All right, while I'm rambling and while I'm looking at this chart, does anybody here have any questions about either of these companies or the charts? Especially the lifers, if you guys are in here. Feel free to ask about this strategy. While I'm looking at this chart, does anybody here have any questions about either of these companies or the chart? It's going to change the color of this one because I don't like having those white boxes. Feel free to ask about this strategy. While I'm looking at this chart, does anybody here have any questions about either of these companies or the chart? It's going to change the color of this one because I don't like having those white boxes. And you guys kind of already know, because of these 3 candles, you already know what's happening in this area. So it's just a matter of waiting for them to hit the button, right? Because of these 3 candles, you already know what's happening in this area. So let me just move these drawings over a little bit. It's this, actually, I'm just going to turn this into a polyline. You guys get the idea. So let me just move these drawings over a little bit. Polyline. There we go. Actually, I'm just going to turn this into a polyline. You guys get the idea. All right. We'll see how that goes. All right. And again, if they don't sweep this, that's okay. It just means they didn't get their fill, which means it's probably going to be weaker on the way back up to resist, right? It means they're probably going to have an easier time pushing through it.
That's okay. It just means they didn't get their fill.
But I will tell you that these guys don't chase. So if they don't get their fill, that's it. And then when it comes back to that zone, they typically don't defend them.
But I will tell you that these guys don't chase.
When a zone is fully accumulated, fully defendable, then they'll stick to their guns. They'll commit more resources, and they'll pay to play. But if they don't get a full fill, like if they just get this high and it doesn't get challenged, or if they just get little accumulation bits here and there, and they don't get that actual sweep to get that big fill, and it pushes down, that's okay. It just means other institutions are stepping in and just shoving it down, and that's all right. But to get that full fill, a lot of these guys, there's thousands of these, by the way, the institutional traders, the banks, they're wanting it to come up to this zone, which they've created in order to take each other's shares. Like it's a very cannibalistic process.
They're wanting it to come up to this zone, which they've created.
We'll just we'll hang out a little bit, we'll see what happens, and I'm just gonna also peek back on path here.
They're wanting it to come up to this zone, which they've created.
All right.
We'll just
so on path,
and I'm just gonna also.
if I were to draw, I'm just gonna erase this. You guys already saw that worked out very cleanly, very easily.
All right.
I'm just gonna draw the same approach. Okay.
If I were to
So
draw,
what these guys are gonna want to do
you guys already saw that
is they're gonna want to test that fib zone, right?
approach. Okay.
Then they're going to want to, well, I mean, it might already count.
They're going to want to test that.
Looking for that.
Fib
Okay.
zone, right?
So that's ideally what we see,
Then
but
they're
we'll
gonna
have to
want
wait.
I mean,
So we get another harami here, another inside candle here, but the volume is kind of weak. So I'm waiting to see if there's a good purity of volume stepping in here.
What we see, but we'll have to wait. So we get
Without that, there's not much we can do.
So I'm waiting to see.
So while that's going on, I suppose I should just look for the actual earnings results. I don't typically look at these.
Without that, there's not much we can do.
Well, that's going on. They do have an earnings call at 5 for Adobe, 5 Eastern.
Typically look at these. Without that, there's not much we can do.
Let me see here.
Well, that's going on.
If anybody has those earnings, feel free to slap them in the chat. But I just don't typically look at these. I don't see them on the Google.
If anybody
10 minutes
has
ago.
those earnings,
So higher Q1 revenue, adjusted earnings.
but I just don't.
Okay,